Welcome to TradeTheMBI.com. This is John. This report is for the 9th of July and just seems to be like buzzing by. Well, we got into the buy configuration as we saw from our setup here, and you can see that that has just cleared the way. I mean, once we got over the 61%, there really wasn't anything until the 76, and now from above the 76, there just isn't anything until the 100%, which that's right about where we're reaching now. We can see the cyan under red, which is always buy. But even back here from the green crossover, and that has just been a continuation. And not a whole lot of resistance. There's a lot of talk about why this and that shouldn't take place, yada yada, but none of that really means anything in a growing economy, which is we've talked about before. There are all sorts of potential stumbling blocks, yada yada, but doesn't really matter when you're having this level of persistent resistance that says the market should be collapsing and falling apart, and those become guaranteed short buyers. That's a catalyst for it's no different than everyone who was writing off the dollar. We kept seeing the rising shakeout, the improved extreme histogram on lower lows, and this was the one obviously that proved itself because we had the lower 23%, which was the falling highs, drawing price up towards that 50%, which currently now is 185, so that's the catalyst pulling things. We still have to reach the previous range that was right over here. Where was that at? Roughly the 182 range. So we'll see if it's able to muster enough. It's getting up there, but all relative to what's going on with oil, interest rates, crazy run here with the TLT and the rise. It's just counter to the inflation trade that is guaranteed in this move right here. So it's going to be quite interesting when those two meet. Now, obviously, it's an indication that people are pulling out of equities and putting into safety, but at a certain point, they're going to get behind the yield, and that is going to create a problem where catch-up has to be played, and that could drive the ES over 3,000 easily, because they'll be chasing yield, and that usually happens later in the year. But certainly nothing stopping it from happening the summertime. Now, if something changes and we get a reading that's not consistent that causes a flip, sure. But for now, that's not what we're seeing. And this is part of the struggle with gold, because even though we can see the buy signal, the problem is we've had the dip below the red line, and we're going to revisit some of that. We've already seen now that we're equivalently what we would call almost overbought within this configuration, and it just started the rally. Now, that doesn't mean it can't continue a little bit. It's just a warning that the algo hasn't kicked in completely, or at least isn't even taking over. It's being overwhelmed by continual selling within it. So let's take a look at this. This is some interesting little chart here. This is the 5K. We're going to go back from the beginning of the start of the day, which was Friday. We'll slide this along right here. Here we go. So we ended up with gold over the 50%, and that left still a decent range to the 100%. Not only did we get to the 100%, but then we produced the overbought, and there was the little blue candle, and sure enough, you ended up with a DOC spread. And that retraced nicely, filled in a bunch of that area right there, and then we turned around, and again we ended up with another gold right here, which was right at the 50%. That was right around the 38 number, and sure enough, took us to the 100%. It's so beautiful when that happens. No positive extremes through any of that, so nothing to indicate it. We didn't get a positive extreme until right up here at the 55 range. And that's when we started to see a series of the red dots in that, though we had pretty consistent, still rising red. It wasn't until we started making the new highs right here on the lower shakeout that it really becomes interesting from a short standpoint in my view. And for me, either of these coming through here when we get into the 63.50, 64 and a quarter became minor short interest targets. The problem with that is that you're not expecting a lot. You have no real upside because we were caught between the above the 76% at this particular case, and so from a resistance standpoint, you can still keep going from there. But sure enough, later on in the day, there you go. You get your partial refills. Wasn't much. Didn't even get to the 50%. Where did we drop to? 56. So from what I was talking about on those higher highs up in the 64 range and that for a short, that's still a pretty decent return. On that, did not fill all of them. That means there's still some of these that may get revisited in the upcoming future. But what we had is the opening of futures, and again, it started off immediately with positive extremes right off the bat, right back to the 100%, and has made new ones. We then got gold candle. We're already at the 100%, so it really doesn't matter. But now we're starting to see the Azure rising right here, and that's got to make new checkout highs. Otherwise, you're looking at a similar situation where you're likely to see some of that get filled in pretty quick. We're getting a narrowing of the range, but still it's pretty decent. I mean, we went from 30, we ended at 18, so it's been cut in half. But a lot of euphoria, and that's a nice and easy thing to do in the summertime. So that's currently where things are at. So probably I would expect to open towards the highs. That would force even more short covering if there was any. We look back at the daily just to get a gauge as to how much there is. Gives us a little better picture. You're not seeing a whole lot of, when you're below negative 7.5 with the cyan, even in minus 6 1/4 from the intraday, you do that on a daily, and you can certainly tell from right here, -4, we went right down to 7 on a down day, and right before the crossover, and that was a clear indication that there just weren't any shorts to stop what's taking place. And oh wait, we should just go ahead and mark the 100% number so that we know what that upside target is. That's at 96, 27.96, and 48.50 on the 76. If we go over here, we can look at what the magenta stop was, right around 67.50. So that became a little bit of resistance right there. We retraced right off of that, which was an interesting, and then catapulted right above it. So that was how that configured. But I will continue to update charts and anything relevant as they pop in. As always, trade well. We'll talk again later.